As 2024 comes to a close and we start looking forward to 2025, I'm going to highlight several stocks that I think are excellent buys for 2025, starting with this video and starting with this stock. Down 29% off its highs. I think Uber Technologies is an excellent stock to buy for investors for 2025. And in this video, I'm going to explain why I think that's the case. So let's jump into the details and see.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So as I highlighted in the beginning of the video, Uber Technologies is down 29% off its highs. And one of the reasons why it's down is because of anticipation of driverless car technology that's poised to hurt the company's business. As it stands right now, investors are betting that if there is driverless car technology at some point in the future, that technology is going to be harmful to Uber's business. I have been more on the maybe it is, maybe it's not decision point, because drivers are Uber's largest expense. The largest expense by far Uber pays for is drivers. And if there is driverless car technology on the market that Uber can potentially license and use itself and pay a price that's lower than what it's paying drivers, and at the same time improve the service to customers, because driverless cars could be better than cars with people inside, that might not be a negative for the business. In fact, it might be a net positive. But the way the market sees it right now is that it's a huge negative. And that's why every time you see an announcement from Tesla about some marketing thing that they do where they show off their progress on driverless cars, it sends Uber's stock price down, because that's how markets see Uber's business in the future. They see it being hurt by driverless technology, where I don't think that's the case. I don't think that's necessarily the case. One of the other reasons why I like Uber stock and I'm recommending Uber stock is because they've grown to such a large scale, 42 billion in trailing 12-month revenue. And this has surprised me positively. I was thinking that when economies reopened, Uber's food delivery business would struggle mightily. That was my initial forecast for Uber's food delivery business, but I've been surprised that that side of the business has continued to grow, not only sustained the revenues it achieved during the pandemic, but actually grown from that. Surprising, and positively so. And I think that demonstrates the customer value proposition. People like the convenience of ordering food to be delivered to their homes, and they're willing to pay for it. They've demonstrated a willingness to pay for this service, and to a level that generates positive cash flow for Uber. Speaking of cash flow, the company has done an incredible job boosting its cash flow from operations. In the trailing 12 months, that number came in closer to 15%. That's up from around negative 40% during the depths of the pandemic. Of course, during that time, only one side of the business was thriving, and that was the food delivery side. But since the economic reopening gained momentum, now Uber has both sides of the business thriving. The food delivery side of the business and the ride-sharing side of the business are both thriving. And I've got to give credit to the CEO, Dara Khosrowshahi. I think he's been one of the best CEOs of the last 5 years, based on the way he's improved Uber's business from where it was before he came in and where it is now. And this dramatic turnaround he's delivered at the company, I think he's done an excellent job. And there's maybe a dozen or fewer CEOs that I've noticeably seen make a huge improvement in the companies they've held leadership roles in. And Dara Khosrowshahi at Uber is one of those handful of CEOs that I've seen do such a remarkably good job. And so I give the company bonus points for having leadership, strong leadership at the top. The balance sheet is okay. It's not great, but it's also not bad. They have $6.15 billion in cash and equivalents, and $11 billion in debt. The debt is serviceable because they generate so much cash flow from operations, they can pay down the debt no problem. And the cash on the balance sheet at $6.15 billion gives the company enough cash on hand to make strategic acquisitions or invest in other growth opportunities they see ahead. Return on invested capital has improved dramatically as well, 19.2%, which is a really good return on invested capital, especially for a company in as early stage development as Uber is in. 19.2% is really strong. Now let's look at valuation, which is one of the primary reasons why I like the stock. I've seen a lot of companies that demonstrate these kinds of, well, I shouldn't say a lot because the kind of numbers that Uber is demonstrating is not all that common. But I've seen other companies generate similar results, but not very many that are generating these types of results are selling at this low of a valuation, a forward price to earnings of 19.6. Of course, part of the reason why it's selling at this low of a valuation is because of the market's perceived risk from driverless car technology. And I already talked about how I don't think that it's going to necessarily be a net negative, even though it could. It could be really bad for the business, but it can also be really good for the business. And the downside is certainly bigger than the upside for Uber in this regard. It can completely destroy the company's revenue generating opportunities. But on the other side, it can only reduce its cost. It's not going to eliminate its costs for drivers or for delivering the rides because it still has to pay for the technology. It's not going to be free. So I agree the downside is much larger than the upside from the technology, but net, I'm not so sure it's going to be a negative for the company. Furthermore, I think driverless car technology is further in the future than most expect. I think the regulations surrounding driverless car technology, especially in the United States, are going to be slow. They're going to be cumbersome. And the market has recently upgraded the probabilities of that happening sooner rather than later because of the incoming administration and Donald Trump's relationship with Elon Musk. People all of a sudden think that Tesla's going to have driverless cars on the road next year, which Tesla has been saying for 7 years now. So I think the probability that Tesla has driverless cars on the road next year, testing wise, is maybe 25%, 25 to 35% that they actually do as they said and have driverless cars on the road being tested. And that just based off of their history, based off of the history of their forecast, they've been constantly late and behind and under delivering on their technology. So I think Uber is a great counter bet to that development of that technology. I shared with you the forward PE ratio, and let me share with you my discounted cash flow valuation model for Uber. I did this on December 5th, and I came to the conclusion that the intrinsic value per share for Uber is $112. The current market price is $61. Yet another data point demonstrating to me that Uber shares are undervalued. So here's one stock that I think is an excellent investment for 2025. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.